Hello there and welcome to the HI European Market Neutral monthly video update for April 2021. This was a pretty solid, if not stellar, month for the fund, and I think it showed a bit of recovery from the slightly weaker March that we had, as you'll recall. We had a number of things go right and one or two things go wrong, and overall it felt that our stock picking was generally getting a bit better. So the standout winner for us was again Evolution Gaming, the Swedish B2B casino play. It's been fantastic this year. The shares have almost doubled. It's a useful position. You know, we're very conscious when you go to casino, you've got to be careful about your winning streaks and take profits. So all over the share price in that one in terms of what to do with it, but great to see it continue to do well. Couldn't be more different to one of our other winners, Nestle, and Nestle's been around forever. It's been in the fund forever as far as I can see as well. Really solid performance from Nestle. People have been selling the staples on the back of, COVID was fantastic for the staples, and actually now people are saying we can be in more exciting recovery plays and the staples are boring. Well, kind of Nestle disproved that with fantastic 7% organic growth. They haven't done that for a decade. Nestle is a very different business. Things like pet food's done well. Pets have been popular during COVID and lockdown, as I'm sure you're aware. So it changed its business and has always been pretty good at changing its business. So good to see that strong performance from Nestle. DSV Panalpina, the logistics business we bought last month, made a great start, made a further acquisition of Affinity Logistics in the Middle East. This looks like another sensible deal. You'll recall they did Panalpina back in 2019. So, complex environment in global logistics right now. People need help, they need support, they need a good freight forwarder. And I think this is a good deal for DSV, and the shares have reacted really strongly already. Which is good for the fund. So a couple of really strong winners there. I guess the most difficult area for us in the long book has been autos. It's been a well-documented issue in autos that there aren't enough semiconductors. And a big chunk of cars are autos now. I think I've seen numbers suggesting that in the future up to 50% of the value of a car will be in these semiconductors. So at the moment the big manufacturers can't get the semiconductors. I think you'll note that Ford had a 25% production cut on the back of the semi shortage. So that's been bad news for Stellantis and VW, our longs in the sector. Shame actually because their numbers were pretty good. Melrose is slightly caught up in that. Melrose, different story, tier 1 auto supplier and aero supplier. So auto bad on semis, aero still to recover. But the issue more for Melrose has been the long-awaited disposal of Nortec was done with a cash return. And it's almost like people were waiting for that and the shares have been a bit dribbly since. So a little bit disappointing. I think a sensible long-term play given its low multiple. In the short book, went back into BAT, tobacco. Tobacco is just a horrible place to be. However much they try and make themselves more investable, they seem to become under more pressure from regulators. And it doesn't really matter how lowly valued the shares are at the moment. They feel in a pretty tough place. We did well in the Amadeus short. Amadeus is one of the global ticketing platforms for air travel. And I think people got excited about air travel recovery a bit early, basically. And actually, earnings momentum still negative in Amadeus. So that's been a good short for us. The most painful part of the short book has been in our German real estate pair, where we're long Vonovia and short Deutsche Wohnen. Deutsche Wohnen benefited from Berlin lifting the rent freeze, so real positive for them there, being 20% Berlin exposed. So, unfortunate timing for us and didn't really work on the pair. We still think Vonovia is the better of the two in terms of a longer term real estate play, so we're happy to keep running that. But in the short term, that didn't work well for us. We've had a little bit more reopening again in the UK with Jet2 and JD Sports. The UK's vaccine rollout and reopening seems to be going pretty well, so we're encouraged by that. And we closed our Adevinta short. Adevinta is an online classifieds group in Europe, which had been a pretty poor performer, but we know how quickly people can get excited about this kind of stuff. So happy to close and move on. So overall, a steady month, not exactly too exciting, but I think some encouraging trends. I think actually holding on to some of our positions, taking a slightly longer view, trading a bit less, is all working a bit more for us. And we need to keep that trend, that trend really pushing forward into the spring and summer of this year if we're going to start delivering some more consistent returns that we want to for clients. Clearly lots of noise out there in the markets. So far, the market's been pretty sanguine. It's kind of ignored the bad news, the geopolitics, perhaps some of the inflationary chat. There's plenty out there to get a little bit worried about, I think, for most people, but there always is in equity markets. But so far, markets have been pretty sanguine about that. I think the one thing that we're taking on a little bit more at the moment is share price reactions a little bit more normal. Shares are normalizing. So things like a good run into ordinary numbers, the shares are rolling over, which is probably a good thing that we're seeing the same kind of share price reactions that most of us have been used to in our investment careers. So overall, we're pleased to have got through the month. We did a lot right, we did a bit wrong, but in balance, we're reasonably satisfied with where we've got to, and we need to keep improving our stock picking and our stock selection and our market timing to keep delivering during this year. Thank you.